Hello everyone, my name is Zach and welcome to another episode of Singapore's Real Estate Explained, brought to you by the CONDO Investments team. So today we are doing something slightly different. We are not talking about new launches. We are not talking about government initiatives. Today will be something more of a personal sharing by our Director of Investments, Christian.
Hello everyone, my name is Christian. Your first time in this channel, thank you for joining us today. And if following us thus far, we are very thankful that you have been in this journey with us, and we hope that this and that channel will bring you more value over the years to come.
Yeah, correct. Okay. So something interesting, basically for me, this topic is something that I've been thinking about since the first time I met Chris, right? We all know his portfolio, given his resources, right? The one big question that I always have is, why is he still in the condo game when everyone is trying to get into the landed game? And this is exactly the topic that we are talking about today. So why he didn't buy a landed in 2025? So in 2025, why is because I know you have also recently entered a new development.
Yes.
So I was just curious, given your resources, why are you not in the landed side?
Yes. So I bought this place called Ori, a 4-bedder at Toa Payoh area. Okay, about 3 million quantum.
Yep.
And to answer the question simply, it's two reasons. One is personal, the other is more investment part, which I'll share today. So personally, my wife actually simply hate landed. Don't like landed at all because she feels that it's like level 1, level 2. I mean, she worried about rodents, cockroach, and bugs. And that's something that she tell me if I want to stay, I'll never stay in a landed. So that's the personal reason. Okay. I don't want to sleep at my outside the living room for a long time. So definitely something that I need to respect her decision. So I won't say it's stepping out. Then it comes to today's topic about investment. So I actually dive very deep. I've been looking for landed for 8 months or 9 months before this year. And looking at the price climb is one thing, but asking myself, would the landed price continue climbing? And when I deep dive into the research and I comb the whole market, I noticed something which I hope that today's sharing will give you a better insight of where the market is heading for both landed and condo.
Correct. Okay, so from what I'm hearing, I think the personal reason aside, I think there's the investment part also, right? So when he look at landed as an investment, why did he not enter it? So this is what we are going to discuss today. And so I'm just curious, what actually did you observe for the landed pricing and the volume in 2025 that made you like, I think maybe this might not be the time to enter?
Yeah, so you look at the landed trends in 2025. One thing that people are saying, I mean, the very market, the prices are rising ever since 2017. In fact, in City Fringe area, the landed price went up by 75.49%. Okay, all-time high today. Okay, in fact, if you look at D15, one of the most popular places, the price ran up by 76% too. Okay, and if you look at Terrace, 76.31%, okay, 1,000 per square feet growth. And if you look at this, all-time high. Okay, where right now, if I were to buy a project, my neighbors will be so happy because we are setting a new benchmark for them, being one of the individual who buy highest, while 99% of neighbors buy 76% lower. And this, if you look back in the trend long time ago, 1,000 per square feet growth from 2016 to 2017, it happened before. If you look back in 2005 to 2012, it also went up by 1,000 per square feet. Okay, and they went up by 200% per square feet, gained over a lower price. Okay, and after that, in 2012 to 2017, 5 year, there was a drop in 5%.
Yep.
So this actually got me thinking, are we at an all-time high?
So so that's a very good question, right, to ask. So definitely, I think this is what Chris will cover later. But I'm just curious, I mean, in terms of landed, there's different asset classes. Say comparing terrace and semi-D, were there any differences in the growth?
Okay, so yes, that's a very good question. So I actually went into the research a bit more. Terrace actually dipped by 8% during that 4 years. Okay. Meanwhile, in terms of semi-detached, you can notice it went down by 70.33%. So the bigger quantum you go, okay, likelihood of dropping is actually pretty high. So for me, of course, then it boils down to the question, are we at an all-time high now or we continue climbing higher? So that is something, a matrix I'll be tracing. Okay, two main things. One is the cost of the dip or the cost of the rise in property prices for landed, and most importantly, what's the fundamentals behind that? So from there, I derive a conclusion which I will end up with a bang at the end, why I actually end up choosing a condo over landed.
Yeah. Okay. So I think you also mentioned, right, in between, especially during the 2013, 2016, there was a dip, especially the semi-detached part. So I'm just curious, what actually caused the dip back then?
So if you backtrack to the time in 2013, there was a big cooling measure that came in called TDSR, Total Debt Servicing Ratio. It means based on your income and age, your loan is very limited. Okay, they actually impose a 55%, I will say, a restriction of your income to pay off the loan. Okay, so what does it mean? Before 2013, okay, TDS implemented, someone with 10K income, 30-year-old can easily borrow about 2.174 million. Okay, after this measure came out, okay, this borrowing power dropped to 1.33 million. So what does it mean? It means that people can no longer borrow as much to buy into landed. There are more capped, especially in terms of how much you can loan. And the market became very quiet.
Yeah.
So when borrowing power drops, market demand drops, a big quantum property like landed is really affected.
Yeah.
So that's one of the key things that we do trace accordingly if government cooling measure were to come out. Okay? But more importantly, one more other key factor is actually linked to market uncertainty. So when there's a lot of things happening in the big macro economy, like back then, there was this thing called taper tantrum, where people are all saying there will be a crash coming soon. It was always very very high intention, where the Fed actually came in and said they'll raise interest rate, and there's controversial bond buying back program that began a whole series of controversial of market crashing. So the market is a little more uncertain, likelihood or landed. Okay, business owner, they want to cash out to be able to see, are we able to downsize something smaller or have more cash flow liquidity, which is happening at the back end of the market right now.
Okay. I think that's a very good insight, right? To share with us why there's this dip. But of course, after the dip, there was another 70% rise lah. So I'm just curious also, what caused that to shoot up to whatever, like the all-time high that we're talking about?
Yes. So for that's something that we trace what is the cause of the bull run. If you look at during the recovery phase, after the dip for 5 years, okay, back then in 2019, this something that we observed, of course, it is a reason, along with the lower interest rate environment back in COVID-19 that actually boosted the entire market. I want you to take note is in D15 landed, okay, back then, terrace were going at about close to 3 million. But there are new launches, new projects coming out. All-time high kind of prices at this place called Amber Park, sky high at 3.7 million for a 4-bedroom. So today you can buy a landed cheaper than a 4-bedroom new launch condo. Although it's 20 years old for landed, but it's still a landed. And that what we notice is naturally the price start to shoot up, okay, over here and rise to the bull run. In 2021, okay, interestingly, people say, hey, it went up quite a bit. We couldn't go up further and couldn't climbing up. It's also because even in 2021, even after landed rise, the condo and landed price are still the same in terms of quantum. You can buy a landed at the same price as a new launch condo back then, and naturally this caused the gap to widen to where we are today.
Right.
So this is something that I keep tracing to see. Are we simply in a state where the landed market can still grow further if there's new launch coming out that are going even higher in price, or are we actually at a point where the landed have exceeded the new launches? And this is when I noticed something very interesting over here. You look at the recent launches because of area harmonization. The new launch today, Emerald Katong, a 4-bedder, is about 3.1 million, even at a freehold premium. Okay, 3.1 is higher, it ranged about 2.9 million on average. At a freehold premium of 3.3 million. Instead of last time the gap where it's very close to each other, the gap today is close to 1.3 million. And that is when I see, would there be new launches that pull up the price even further? But answer right now, unlike last time in 2019, 2020 period, I say no. And this is something that guys thinking that with this gap widening, would there be more trigger factor to pull out the prices?
So with what Chris has been sharing, we are talking about like the D15 area, Marine Parade, East Coast part. But is this, I'm just curious, is this just a one district thing, or is it happening to other areas in Singapore also?
Yes, so let's jump straight into other areas like D10. D10 is Holland area, Bukit Timah area. Look at the landed back then. Terrace was going at 4 million. Okay, but a new launch called Leiden Green that launched in 2020 period, the 4-bedder started at 4.7, even deep to 4 million. You can see it's still very similar price as Terrace back then. So it actually caused the Terrace to have a bull run from 4+ million to 6+ million today. Okay, and if you look at other launches that came out in the market back then in D10, like Holland Village, one idea one is one Holland Village residences, a 99-year, not even freehold, a 3-bedroom is going at 3 million. Okay, to up to even later went up to 3.5 million. You see, and even a 4-bedroom, you can see they launched high big quantum, 99-year, 8.9 million. Even deep to 6 million is a 99 project, but selling way above the terrace price. So back then, there are a lot of this kind of hedging, and we also been looking around in the market at other places like, D20, which is Marymount area, you have Jetscape. Jetscape launched a 4-bedder, same price as like a condo. Okay, we have cases like Affinity at Serangoon selling the same price as a terrace nearby. So this is some things that it was happening back in 2019, 2020, which now we see today in the latest launches, that's something I'm a little more price sensitive. I may be wrong, but the key thing is I always play safe. When I buy at the highest point in the entire market, to say it will go higher, there must be I would say a catalyst, something a bull factor. And one thing to note is terrace back then, right now, so terrace right now is going 5.977 million for D10. But meanwhile, you look at the 4-bedroom over here, a lot are going at 3 to about 4 million range here, 4.1, 4.2. The gap itself is still 2 million gap. So now you no longer see like new launches selling more expensive or same price as a landed. Yeah, so the market has shifted because of the single area harmonization.
Yeah. Okay, I understand. All right. So I think with that said, right, we also want to see, okay, so now we are kind of like comparing landed versus condo, right? So I'm just curious, right? Say, for example, back then, because 2014, there was a dip, right?
Yes.
What are some of these market opportunities that if someone didn't go into landed, what were some of the opportunities they had back then?
Correct. So in 2014 opportunity, market was very uncertain.
Yeah.
The US was saying the financial crisis coming soon. TDSR was hit the market very badly. There was no one selling property in the market. So when developer launched a few projects in the market, they were afraid. So they actually priced the unit way more sensitive as compared to that of the market. Yeah. And if you look at D15, let's go back to the landed, right? People did say back then, interesting. Do you know that 2013, 2012, interest rate was pretty low?
Yep.
One of the lowest. And they also did remain low until 2014. Okay, and although it raised up a little bit and it went down in 2016, 2017, you notice the landed price is not exactly highly correlated to interest rate. Yeah, interest rate may be dropping, it may be low, but the landed price for D15 from 5 million actually still deep down to a 4.7, lose 300k.
Yeah.
And for a terrace, okay, from 2.9 million, it actually went down to a 2.6. It lost about 250k for terrace in D15. Okay, meanwhile, if back then you look into the market and find somewhere else, even in the outskirt area, like Panorama, okay, back then the value was very price sensitive. 2014, they launched it way below the market at 1.6 plus million. When the market recovered later on in 2018, 2019, when there were more land bids that set the new benchmark, the price went up by 950,000. So instead of buying into a terrace of 2.5 million, you can afford, you can back then in 2014, but you enter into something of a greater value of 1.6 million, you can make much more while you have made a difference of close to 1.2 million. One lost 300k, one made 950k. And also, if you look at other examples back then in High Park Residence, this place is really very bad location out of the way. Okay, quite ulu. You can buy something at 1.16 million and make close to 450k. You can buy 2 units instead of 1 terrace. You buy 2 4-bedder back then and make 900k equivalent. And not just that, if you look at even the worst case scenario, buy something even higher in a better location, Commonwealth Tower next to Queenstown. Not the best new launch, you were selling a bit higher than market. They still make close to 322k for a 4-bedder. So key over here doesn't mean buying a landed is always the best. It doesn't mean buying higher price always the best. The key is always understand the market. So look at the investment element of it. And then my own say element is not, if I love landed, I mean, okay, I don't mind buying something that just to save for long term. But once I look at the investment element, I really start to think twice. And I told myself, if I can find a better deal in the market, which I did find Ori, which in short, selling cheaper than a resale, but then selling way cheaper than a landed, almost like 3 million when landed around the Caldecott area is going at $7 to $9 million. So this is some things that you can afford something, but doesn't mean that you should really go and maximize it, because it's not for vanity. Sometimes it's really for value.
Correct. So I'm just curious also, I mean, we compare condos and landed, like in the term of investment, right? Were there other factors that you found condos maybe a little bit more attractive in terms of investment? Say, for example, exit strategy or like some possibilities compared to landed? Like what are some of the things that could be slightly more attractive?
Yeah, so in terms of condo, definitely, because it's, I would say, more of a mass market kind of product where people can still be able to afford, and income are rising to afford a bigger condo today. As compared to a landed where the price is high, you really sell with someone with much higher income. The exit is, I would say, sometimes maybe a little tricky unless the market really have the kind of phenomenon as mentioned, some condo, same price as a landed for new launch. Okay, and one more thing that I did really went down to analyze, which really deterred me a lot, is actually the expenses versus the returns. So what I went to look around the market. Okay, back then, 4 million. I can also buy other things like Opera Estate, a smaller landed boutique, or some cases that next to roadside, which I don't recommend for some of the terrace. Yeah. Okay, some of them are very tight also, very narrow, which landed, we have done a whole new homework about it. Yeah. But in short, right, if you look at landed by itself, okay, back then, okay, I didn't even consider, since I'm not staying there, my wife would kill me if I really stay at a landed. So I said, okay, why not I rent it out? I do co-living, I do maximize 6 bedrooms and maybe 1,500 and 5 bedroom nowadays. Yeah. Okay, I rent out for about 7,500 a month. Okay, but if I talk about the returns, what I did is I went to calculate the expenses. Yeah. And it's crazy because in terms of one thing that killed me back then was actually the bank interest. Even at 2%, 4 years of holding period is at 227K. Yeah. Okay, which rental there you see in a while may not be able to cover this. Buy 179K, maintenance fee, rental income tax, minor renovation. I need to do something to do all the to repair and things like that. It may happen. A rental agent commission and a sale fee. The cost needed to own the landed is already $678,000 for next 4 years.
You can buy a HDB.
Yes.
It's crazy. Okay.
Yeah, so this is the real fact of landed. People they see the glamour of landed going up, but they don't see the inherent cost in it, which I did calculate and deter me because after that, when I look at the returns, let's see. Yeah. I didn't even predict that rental income 324K can actually 7,500 can barely cover my buy stamp duty and low interest. Yeah. And still negative. And I even predict a 400K returns, which is something very, very decent, 10%, which I don't hope it go up even further. But if it didn't, it did 300K, it will be a double negative loss. 600, it will be eating into my cash flow proceeds and I'll lose 600K upfront. And if I factor in 600 plus K returns, after every deduction, I only earn $38,000. Yeah. After 3 to 4 years, regardless. And end of the day, okay, at 4.4 million, I barely make 0.5%. So unless this is an own stay, I really love landed. It's my dream to stay in landed. Which for me, I'm very comfortable. If I even say HDB is something that I'm very thankful for. Having a roof over our head is something that I use the money for better usage. So if investment perspective, then it really deterred me.
So it sounds like there are, when it comes to looking at the landed returns in the investment point of view, looking at this, it doesn't seem quite the right choice lah, right? So I'm just curious, then we compare to your condo that you have looked into. Yes. Maybe could you run us through some numbers to see, to let us see and the viewers see why did you go into that and why do you think that the returns makes more sense?
All right. Yeah. So what I did is I went to look at the condo returns. Okay, first thing first, expenses. So for me, I bought into new launches. So bank interest is progressive payment. Yes. Fun fact, if you know and tabulate the returns, it's close to $24,000 in the next few years. Okay, and if I add buy stamp duty, maintenance fee I don't have to pay for the next 3 years. Properties I don't have to pay, no rental income tax also. Add everything together. In terms of the total fee I'm paying, even I pay an agent to sell my property, I don't sell myself. Okay, I will expense 244K, which technically is still decently high, but kidding is still 3 times less than landed. And if I find something that's cheaper than a resale, for example, the last that happened was J-Scape, we made about $1.2 million. Okay, but right now I predict a lower return of about 900K. If I factor all these things, okay, and rental income for 1 year to rent out if I want to for 4 years, net of everything, I also get about close to $750,000, which is way more higher than compared to that of holding on to a landed. So this opportunity cost, which even if I don't want to rent out, I stay, it was still at least know that I bought at the same entry price and being able to exit easily as compared to a landed, which is currently already sky high, way higher than any single asset class that we see in the market right now.
For sure. Okay, so I'm just curious, looking at this, right? You projected 900K. Is there any basis for you to say, some people will say, wow, you project 900K, sure or not? Yes. I'm just curious, what is your basis?
So the basis for this is that, number one, I can buy a new launch, which is technically more expensive and resale it cheaper than a resale nearby.
Okay, yep.
And if I look around the transaction at TOP project, J-Scape already hit 4.2 million for a 4-bedder, for something that is a big living area. So for me, if I buy a 3, I'm not even greedy. I said 3.9 for a smaller living room. Yes, slightly smaller, but it's just a very safe exit. But for now, unfortunately, it's very fully sold. But the kidding over here is always catch opportunity in this rather than FOMO in the market. And when people say buy landed is always the best. It's long-term hold. Be able to know how to read the market and look at data points that people may not know.
Yeah, for sure. Yeah. So ultimately, when it comes to buying, we still need to ultimately know what is our right entry price, exit strategy, etc. So if you are feeling a bit lost or anything in the market, not sure what to buy next, there is a QR code down there. Yep. Any question, just feel free to scan and then we will have someone to reach out to you as well. Okay. So we are also talking, so right now we are talking about condo, right? Then it's an investment now already. So from here, we want to talk about like in future. Okay, from here then, what is your target hold period? Are you planning to hold for a long time for Ori, or what is your exit plan in that sense?
Okay, so for me, it's always, okay, once you hit the sell annuity time, back then it was 3 years.
Yep.
Okay, I'll flip and sell. Okay, and now it's 4 years because time is precious. Whenever we grow older, every year that we grow, our loan tenure actually decreases.
Yep.
So if I capitalize now, but I'm 29, there's still a total of, I would say, maybe 10 more, okay, maybe I'll say 40 years to go, 10 more cycles, or maybe 6-7 more cycles to go. Every single cycle is very, very crucial.
Yes.
So by then, potentially the landed market may cool down a little more. Maybe there are more fundamentals in the landed market, can re-enter back again, but not for vanity, but really for value.
Yeah.
And meanwhile, for my wife, okay, because her name is held under a property, the resale market went pretty high in the past few years. Okay, went up by close to 30-40%. For the property held, we are going to exit accordingly, and from there recycle this property into something of greater value, which in fact we found one in the market, but of course making sure that safety net is all done properly and not just re-entering just because of own sale element and for vanity's sake.
Yep, of course. So what I'm hearing is definitely seize the opportunities while we are young, right?
Yes.
Because as we grow older, loan tenure, this is what we are seeing with quite a number of our clients, that the loan tenure is something that is being affected. So yeah, totally agree with you, right? So with that said, I also want to see like in terms of like liquidity, it sounds like right now we are in the stage of getting it liquidated. Like as fast as possible, because you mentioned lender a bit hard to sell, right? So like why is that important for you in these next 3 to 5 years for you and your wife lah?
So that's a very good question, because we did have a discussion that this isn't our life. We want to focus more towards the business side. Okay, for real estate and with business, right? For us, we are very into liquidity. We want to make sure that cash is set aside, not just in terms of business, also for real estate. The worst case scenario where all the rental stop, I can make sure I can survive for the next 3 years, even without rental. So there's something that we are always emphasizing for our client, that sitting there and we need to walk the talk. So that really got us thinking that when it comes to liquidity, it's not just about buying the right property, but always preparing for the worst case. When the market rate goes down, we have the safety buffer to finance all that we have. So that's why when it comes to going landed, there's also a consideration, you're right, that if I were to lock in everything and maybe left 100, 150k, 200k in our finances, it's not good. Because in worst case scenario, we cannot, things go south, everything go haywire. It's not just about financing a landed, but also financing the business, and also making sure we are true shepherds of the sheep that we are entrusted to lead and guide. And that is our heart for the team, to know that this is not just for our own self-win conceit, but rather one that is truly for a long-term purpose.
Okay, thanks for sharing. I think so ultimately what we are getting from this ultimately is, as much as we want to continue to stay invested, we also need to be wise about it, right? Safety buffers is what we always emphasize for our clients. Doesn't mean you have the money, put everything into it. We want to make sure that everything is accounted for, and that's what we do for our clients as well. Okay, so with that, towards the end of this, now that we've seen the future, we also want to have some reflection thoughts, right? And also some advice for our viewers out there, right? So first question, of course, one of the reflection points that I was thinking is, before you went into this whole research, landed and condo, what are some of these misconceptions that you had that maybe some of our viewers also have? Maybe see if these are things that are like, this is something I thought about before also.
Yes, so I think that one of the misconceptions I have is landed is always a blue chip. It's always good to buy landed. They say you hold for a long term, you're young, you should quickly invest in a landed. And landed is always going up and up and up, which I realized is not true when I trace back. Even I did some minor studies. If you look back, the studies of 1996, there was a great crash in landed. The highest crash was actually the bigger asset classes. So it's not always true that landed is always going up, but be more prudent to understand what is the key drivers, and then from there make a more informed choice.
Definitely. So with that said, maybe some of our viewers are still thinking of wanting a landed. So definitely, I think everybody's priorities in different seasons of their life are different. So if we really have a viewer who is looking for landed right now, what are some of these conditions that you would suggest that they meet first before considering landed?
Okay, so for me, this season, especially with the market being a bit uncertain, look at liquidity. For me, is have safety net. Because for me, it's not just about buying a property you can make appreciate. I mean, it's always about having that safety buffer in the worst case scenario happen. So this season, in fact, we're buffering quite a bit of cash. Really to any market downturn, we do expect that to happen. But the key thing is always have liquidity so that in the worst case scenario, you're still able to finance your loan. Okay. And the second thing is to make sure that you're looking at landed, not just like, oh, I'm going to buy more to invest. Because when you have that kind of expectation, you end up being very stressed up when the property doesn't appreciate as what you want. But looking at more towards own still a place you can build a home for long term, and you're okay with losing maybe 700k potentially. I mean, nothing wrong with that and looking at expenses. But if you are looking purely as an investment angle, that is when we need to really drill down the data, the numbers, and really talk to people on the ground to understand what is really happening in the landed market today.
Okay, no problem. So I think with what we have discussed today, landed market is not that we cannot enter. We just still have to run through the numbers properly before we make a decision. So in this case, for you, right now you're in the condo play, right? Then what would be something that you feel need to change in the current market, or maybe in your own personal life, for you then pivot to landed?
Okay, so for me to re-enter the market again, okay, the market have to shift. One thing that I will trace is look at the new launches in the market coming out today. Look at the condo of 4-bedder, okay, 5-bedder, and compare to the terrace or semi nearby. Is the price higher than this semi and terrace? Or even same price, it's still good enough. And by using that, you're able to find deals like that in the market. But right now, I've been looking at all the upcoming land bids. Even I added in the 4-bedder prices and all these things. Currently, there isn't one that is as such. Okay, but if there is, maybe potentially there could be another opportunity, certain districts, certain areas that's worth considering. And the second thing is, of course, okay, for me, personally, I will want to have even more safety net when it comes to landed. Okay, not just for me, it's obviously a safety buffer. And put liquid asset now, like stock market and all these things is for me, it's still quite a red ocean, a very bloody ocean right now. The stocks are crashing. But meanwhile, in terms of cash wise, it's always set aside the kind of safety net that I have. And for me, I care two parts, as I mentioned. So one is business. Set aside one part that I will not touch, which is discipline. That this money is way for business and it's to support the whole running of the business. Second part, another set of cash flow to support the real estate side if anything were to crash. That's why for landed, for me, I need to have a greater buffer, financial safety, so I'll be able to freely focus on the business and also focus on the whole life, our personal life, while being able to juggle all these mortgage obligations.
Okay. All right. So thank you, Chris, for sharing so openly and vulnerably with us today. I hope you guys have benefited. I have learned a lot today as well. So I think with that said, there are definitely, it still sounds like there are still some uncertainties in the market. There are many people maybe still confused about what are the opportunities out there. What are some of the things that we really need to consider when it comes down to buying the next place or selling the next place. So again, our team is right here, ready to help you anytime you want. So we have our QR code at the bottom there. Just simply scan it and then we will have someone contact you. Okay? So with that, we have come to the end of another episode of Singapore's Real Estate Explained, brought to you by the GN Investments team. So my name is Zach.
My name is Christian.
We'll see you next time.
Bye-bye.
Bye.